What is up, everybody? Happy Monday. You know what that means. Monday means the markets are back open. It is 11:32 a.m. Eastern time, and welcome back to another episode of Benzinga Live. It's August 1st. Fun fact, July was the best month for the S&P 500 since 2020, I believe. November 2020. Let me get that. Today on the show, we will be talking about Tesla. Tesla's had an incredible run over the past 5 weeks or so. We've been getting a lot of people in the comments asking about Tesla stock now above that $900, looking like we're trying to get back to that $1,000 level. So many of our traders out there, many of our audience have been interested in Tesla, seeing exactly what's going on with this Elon deal. We are going to have news by Nick on in here about 15 minutes. Talk the most recent developments in the Elon Musk Twitter deal. Will the Twitter deal lead to Elon selling more Tesla stock? That seems to be the biggest question people have right now surrounding the deal, outside of just what's the outcome of this court case going to be. Is Elon going to have to pay this $1 billion fine? Is Elon going to have to pay more than the $1 billion fine? Is he going to be forced to buy Twitter outright? We don't really know, but there is money to be made out there. There's trades to be made out there that depend on the outcome of that deal, right? Let's see. You see some other of our biggest movers say. Oh, we'll also be talking about some monkeypox stocks today. GOVX has been one that's been on my radar, up more than 100% in the last week. Let me go ahead and get my Benzinga Pro pulled up. Your one-stop shop for all things you need for your trading. We've got live scanners, movers, advanced news feed in here, option squawk, anything you could ever want for trading right here in Benzinga Pro, pro.benzinga.com for your free 2-week trial, no credit card or anything like that needed. I'm getting a signal from my producer that we never ran an intro. All right, let's run the intro, and then we'll get back with some monkeypox.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have
breaking news. All right, so the first monkeypox stock we'll discuss is this Bavarian Nordic. So Bavarian Nordic, I believe, has the only so far approved vaccine for monkeypox. You can see this run the stock has been on since July 15th. So this was just about 2 weeks ago. The stock was at $30. We're up to 56 right now, up $6 and 55 cents on the day. So Bavarian Nordic moving up 13% today. The other one I've been watching is GOVX, up 36% today. Let's go to like a 5-minute chart here just to see some of this intraday action. I mean, selling off a little from hitting these highs of 450, but at $3 and 73 cents. I'm not, and I discussed this last week, I'm not really worried about this monkeypox thing as like a outbreak, epidemic, pandemic type thing like COVID did. And I don't think we'll see, monkeypox is obviously not having the impact on the overall market in terms that COVID did. But that doesn't mean some of these different little vaccine biotech plays can't run, because we've certainly seen that with COVID. We know they can, and biotech names have been beaten down already. So some of these potential monkeypox plays, you got to remember, some of them are down, 50% from their prices already, and then now they're getting this, positive tailwind from monkeypox and really getting these runs. I'm not going up here and chasing GOVX up here right now, but I'm watching these news stories, and when you have something like monkeypox coming out, that's when you can really make money trading the news, right? I mean, even if you didn't really know much about it, but you just heard, okay, it's getting more and more coverage, I'm going to buy this, GOVX stock a few weeks ago, you'd be up more than 100%. And here's what I was saying, looking at a daily chart on this stock in the long run, you can see just how beaten down these are. So, the fact that this thing, well, here we've gotten a lot of reverse splits and whatnot, so it's ugly. But, you can trade the news, and this is, things like monkeypox is where you really have that opportunity. And that's why you got to have Benzinga Pro. Because if you're on Benzinga Pro, you get all this news quicker than other people, and you're able to make that money. Yeah, you can see here, GOVX got its initial pop from the Monkeypox up here, got to about 230, and then came trading all the way back down to like 60 cents, and before getting its most recent pop. So whatever the news has been in the last 2 weeks, I think that the Monkeypox cases are actually spreading more than some people had thought. So a lot of these names have been getting this, second bounce. Let's go back to that Bavarian Nordic. Let's see if Bavarian Nordic. Yeah, see, Bavarian Nordic got this initial pop off the news. And you'll see that oftentimes with the news, because the way the cycles are, you hear about monkeypox for the first time. Okay, people freak out about it for a second, and then it kind of dies off. And then people don't really worry about it again until 2-3 weeks later, a month later, when the cases start rising again. So, interesting here. Not enough air horn. We'll get the air horn back going. I don't know. My soundboard's off right now, but we'll get that fixed. I see Easy Mike in the chat talking about AMD. Let's do a quick check on our semis after. The semis have been moving, right? We know that. Let's go to SOXL. This thing, we're talking about, this is your bullish semiconductor fund from Direction, our good friends over at Direction. We were down at $10 in earlier July, less than a month ago. So more than 100% gain on this fund here. The semi space right now, like, I do think some of these names are still a little expensive, even though NVIDIA has been beaten down so hard. If you compare it to where NVIDIA was at like pre-COVID, right? And this is split adjusted, but $80 a share pre-COVID, and we're at 185 right now. And don't get me wrong, I still love NVIDIA long term. It's one of my biggest holdings in all my long term in my long term portfolio. But am I adding to it right now, right here? No, and that's just because if you think about all the tailwinds that NVIDIA picked up throughout COVID, whether it's an increase in gaming demand, an increase in crypto demand, all these things are kind of reverting back to the mean. You had Microsoft guide, or not guide, but when Microsoft gave its earnings last week, they said basically, or Microsoft said that its Xbox gaming division wasn't as strong as previous quarters. So that leads me to believe it's probably not just Xbox, it's probably industry wide right now, that people are probably gaming a little bit less. When you think about COVID ending, people traveling more, people getting out, enjoying things like sporting events, things like that, it makes sense that people are gaming a little bit less. I only know for myself personally, 100%. I was playing more video games than I was since I was a child at the peak of COVID, because there really wasn't much else to do. And it was one of the best ways to get social interaction with my friends, right? We'd be on our headsets, we'd be talking to each other. It was like we were hanging out. We don't do that anymore. So I think in the short term, right, and that's with stocks like NVIDIA, and if you're talking about something like gaming, you got to think about how it goes through these cyclical natures. Like in general, yes, gaming is going to grow. Gaming's going to continue to grow. You have these famous streamers, all these kids super into it, whether it's Fortnite, whether it's Call of Duty, whether it's sports games like 2K, Madden, and FIFA. Gaming's going to continue to grow. But if the pace that it's growing at is slower than it has been, that still might get reflected in these different video game stocks in the short term. And then in the long term, those stocks should continue to grow as the gaming industry grows. But if all the headlines for the next 6 months are that, people are buying less Switches, people are buying less PlayStations, people are spending less money on new games, obviously that's going to have a negative impact on a lot of these gaming stocks. And then still going forward in the long term, like I said, like gaming's here to grow. It's here to stay. So I like that. Valentine in the chat saying, yep, I do feel that they were gaming a lot during COVID. Yeah, and when we're seeing that a lot, not just in video game stocks, but in just stocks in general of companies that got tailwinds, got boosts during COVID. When I say tailwinds, that's all I mean are boosts, right? You have outside forces that can either be bad for your company and bad for earnings, or good for your company and good for earnings. So take a company like Zoom, for example, who was an existing company, providing telecommunications, but wasn't the Zoom that we know it of. So COVID was a huge boost for Zoom, a huge, huge tailwind. And what we're seeing across the board with companies like this that have gotten huge boosts from COVID is they've given a lot of those gains up as we've kind of reverted back to more normal life, right? Here's Zoom at the peak in October 2020. Stock was at about $580. We're down here now, down to $100. So something like Zoom, right? I mean, Nvidia to me is, if you compare Nvidia to Zoom's chart, you can see Nvidia is still way above its pre-COVID levels. And I'm not saying it shouldn't be. I do think Nvidia, deserves probably to be more up here above 150 split adjusted rather than down here at 80. But I'm just worried that some of these semis are still a little expensive, that some of the headlines we get in the short term will not be great. PayPal, see folks talking about PayPal. PayPal, I mean, talk about one that has given up all its COVID gains and more. I mean, PayPal was 124 pre-COVID, dipped down to about 80 during the COVID dip, ran all the way up to over $300, now trading below here. So conference call scheduled tomorrow. We have earnings tomorrow after close for PayPal. Of course, Square or Block will trade in with PayPal as well. But some of these names are definitely interesting, just looking at how beaten down they've gotten. I mean, PayPal is still a monster. It's one of those companies that, to me, looking at all these different companies that are beaten down, the ones that are actually making money, the ones that are like super pre-revenue, or maybe that they're super growthy and they're not expected to really make any money in the future, like those ones that are beaten down aren't necessarily as exciting to me. But companies like PayPal to me are more interesting. Companies like Netflix, right? Companies like Shopify that have basically been, have proven that they've, can quarter after quarter make a lot of money. And to me, those are the ones that you should be looking to that are beaten down, rather than maybe your, ones like Rivian or Affirm. I see someone talking about in the chat, or even like Airbnb. I don't think has an established, damn, Airbnb. This would have been a good entry point to get in on Airbnb down here when it hit all-time lows. But see, that's the thing. Is like sentiment is so bad when the stock is hitting all-time lows. It's like, okay. Oh, Sludge, you're in SoFi at $8. You can't complain. Some people were in this at like 15, at 20, 25. Look at this thing. You're almost back to $8. You're at 635. My whole thing with SoFi is I don't know a single person that uses it, so it's hard for me to believe that it's like a great product or that they're doing really well, because I don't know one person that uses it. All right, other stocks people are talking about in the chat. PayPal, SoFi, AMD, day after earnings. Yeah, I think let's do that real quick before we bring on Nick, our first guest. So we put out this cool little graphic each week for earnings. Let me get it pulled up on our Twitter. And we usually post it on our Twitter, and so if you're ever looking for it, that's how I usually find it, is I just go to our Benzinga Twitter profile and go to the media tab and search through there until I find it. But this week is probably the most in terms of volume earnings. This week, last week, we kind of had the most in terms of importance between Apple, Microsoft. Oh my God, I just screwed up. I just shared the wrong screen again. So we probably won't even, there probably won't even be every single company that we want to see on there, because there's so many this week. All right. So we've got today. Usually Mondays are pretty slow in terms of earnings, but after the close, we've got Activision Blizzard. I believe still in the Patrick Star. I thought that was your name, Patrick Star. I don't know what your name. I'm sorry. If they don't deliver you swag because I messed up your name, email me and I'll send you a new one with the right name. Today we've got Activision Blizzard. I still believe in the middle of that Microsoft deal. I don't think it's gone through yet, but it looks like it's going to. So I don't think the stock's really moving a lot. Pinterest today after the close might be of interest to some, not really of interest to me. Pinterest would maybe be of more interest if it were one of the first social media companies to report. But all the other social media companies, or a lot of them, whether you're talking about has Meta reported? I can't even remember. Yeah, did Meta report? I don't know. I know Snapchat reported. Not good. Before the open tomorrow, Tuesday, we've got Caterpillar, you got DuPont, we got Uber, you got BP, JetBlue. After the close, AMD, Starbucks, EA Sports, PayPal, SoFi, Airbnb, Caesars, Match Group. So tomorrow after the close, I mean, it's AMD is probably maybe the biggest name that retail investors care about in there, but that's a big day between Airbnb, Caesars, AMD, Gilead, Starbucks, EA Sports. Wednesday before the open, you've got Under Armour, you've got CVS, you got Cars.com. Then after the close, we will have eBay, Allstate, Robinhood, MGM, Fisker, Western Union. Thursday, you've got Alibaba before the open. A lot of people will be watching that one. Eli Lilly. You've got Paramount, Datadog, Shake Shack, my favorite. I might go to Shake Shack today for some lunch. You've got Penn National Gaming. You've got Wayfair. You've got Papa John's. Nikola. You got Nikola after close on Thursday, and then, before the open. And then after the close, you've got Twilio, Lyft, Amgen, Beyond Meat, Expedia Group, Zillow Group, DoorDash, Dropbox, Chegg, Block, which again, Block will be moving based on PayPal's. And then Friday, usually Fridays are a little bit slower, but you've got DraftKings, Brookfield, I believe that's Brookfield Asset Management, ticker BAM. You've got, you got two different Brookfields. Okay, interesting. I'll have to see if that was a mistake, or I think there are two different. All right, guys. So that is our earnings for the week. Let me know in the chat which one you guys are most looking forward to. Which ones, and the ones you're looking most forward to. Which ones you'll be trading, right? We talked last week, how we were trading the Tesla earnings and Apple earnings and all these. So we're not done with earnings season trades just quite yet. So let me know in the chat which ones you guys are most looking forward to. I know the AMD one will be popular. All right, guys, let's go ahead and get ready to bring our first guest of the day on. Our first guest is someone that I very much enjoy having on the show. We had him on the show for the first time a couple weeks ago. You might know him on Twitter as News by Nick. Full name Nicholas Brown. Nick is a great kid. He's about 16, 17, but very interested in not just the stock market, but the news that drives the stock market. And that's what we're all about here at Benzinga. That is what our core product, Benzinga Pro, is. Primarily an advanced news feed. So Nick is someone that understands our mission. We understand his mission. So we love to bring him on the show. Just impressive as hell to me that he's doing all this at 16, 17, because it's probably not appropriate for me to share what I was doing at those ages, but certainly not what Nick was doing. So without further ado, let's go ahead and give Nick our special intro and get him on the show. Nick, how we doing?
I'm good. How are you?
Good. So first things first, I saw on your Twitter you were recently at the New York Stock Exchange.
Yes, we went the last week of July. So I was there from Sunday, July 24th, and we left Wednesday, July 27th. So I was at the Stock Exchange Monday and Tuesday of last week, and it was just a joy being there.
So do you think it was a coincidence that you were there on during one of the best weeks that we've had in the past couple of years?
I joked on Twitter. I said maybe I'll bring the market good luck, and let alone it did happen. I was there, and it was a busy day. We had tons of earnings. We had some of the big tech companies reporting earlier in the week. I got to meet a lot of people that I connect with on social media, and it was great. And so I cannot wait to go back.
Hell yeah. Well, I'm glad you got to do that. It's an awesome experience. What's one thing about the New York Stock Exchange that maybe surprised you, or maybe people at home that have just seen it on TV wouldn't really realize?
I would have to say, whenever they do the opening and closing bell, there are actually a lot of people that gather around and cheer and clap. I was part of that crew Monday for the opening bell and then Tuesday for the closing bell. Just how everybody crowds around CNBC and how close the opening bell podium is. And it's a different scene when you're live on the floor compared to watching it at home. And there's so many people that I got to meet, got to fist bump, shake hands with. It was a great experience, and I loved it.
Did you get to meet, I see in the chat someone asking, did you get to meet Peter Tuchman, the Einstein of Wall Street?
Yes, I did. I got to meet him on Monday when I was leaving, and then when I went back Tuesday in the afternoon, I saw Peter and gave him a wave. And so, yes, I did get to meet with him, and I actually got to I took a picture with him, which I did put on Twitter in a like 16th tweet thread I put out on Wednesday night. I got to see him. I got to see I got to see a lot of people from CNBC, uh, Peter, of course, but I got to see a lot of people on the floor. I got to meet the COO of the New York Stock Exchange. I got to meet a lot of New York Stock Exchange employees too while I was on the floor.
That's awesome, man. I'm jealous. I actually haven't gotten a chance to go yet, but let me know next time you're going. Maybe I'll get to go with you.
Works for me.
So here, let me go ahead and get your Twitter profile pulled up just for anyone who's unfamiliar, because I think you do a pretty impressive job just sharing the news in real time. So I want to ask kind of what have been the top headlines, news stories that you've been watching the past couple weeks?
So I'm going to just start off with today. We got some word earlier this morning. I mean, it was speculation that House Speaker Nancy Pelosi was going to be visiting Taiwan and China. And then earlier this morning, there was a headline that dropped around 8:30, 8:45 that did tank futures a little bit when she was going to be visiting Tapai. And so we heard some strong words from the Chinese military, and they say too that earlier this week or last week they threatened to shoot down her plane. So I don't know why she would want to go. We have the United States on hand saying that they're going to make sure she's safe, but shooting down the House Speaker's plane of the United States scares me. I would not want to go.
Yeah, no, I mean, that's right now with just how many different like news stories you have going on at the same time. This like Taiwan, China one is one that's been getting a lot of news attention, but maybe even still like not enough. Like that's a potentially very big deal.
No, and I think that too. We had Elon Musk news Friday. I joked on Twitter. I said it was 4:45, and I said, "Wow, no Elon Musk news." And then later, like within seconds, I got someone says, "Oh yeah, he found her counterclaim." I'm like, "Are you kidding me?" So that was the third week in a row we got some Elon Musk news. I don't know. I think we're just really focusing on earnings. Earnings were a big driver last week. When we were heading into Thursday, everybody was screaming because of Amazon and Apple. Oh my gosh, it's gonna be fearful. And let alone they beat top and bottom line. And as we had the best month for a lot of the major indices since November 2020. The S&P had its best July since 39 or 1937 per bespoke invest. I don't know. It was just a crazy week last week. And as we head into this week, we still get more earnings from the gig economy sectors, Uber, Lyft, Airbnb. So we're really going to be watching in the heart of earnings season, along with oil prices today. They continue to fall. Per gas buddy guy, Patrick DeHaan on Twitter, oil prices are down near 30 or 93, $94 a barrel. So it's been very volatile in the oil market. And then regarding the 10-year note, below 2.6 this morning. And earlier this month, in June, we were near like 3.5% almost.
Yeah, so real quick, I've got the average gas prices kind of pulled up here throughout the country. Been checking that just because it gives me an idea of, I mean, obviously we want to look at the price of the commodity of the crude oil as well, but what the customers are paying at the pump and can kind of give us a read into inflation. But real quick on the last note you mentioned, the bond yields. Real quick, Nick, do you mind explaining to our audience like exactly why that matters to stock investors?
Yeah, so really if notes, so 10-year, 2-year note continues to go up, makes people very fearful. And so that does have an impact on the general market. Major indices tend to move lower when uh, bonds in 10 years, or so whenever the 10-year, 2-year, 5-year, 20-year, when that's higher, markets tend to be fear. And so that's why indices move lower. Here we have the reverse, 10 years moving lower and markets are moving higher. And so I was looking at some charts this weekend and saw the banks, the big banks, so Citi, Bank of America, JP Morgan, Goldman. I didn't share these charts, but I was just looking at some sectors this weekend and some industries. And seriously, there's a lot of industries that are negative year to date. I mean, at one point, a couple banks, there was like one bank, I don't remember what bank it was. It was up nearly like 20% year to date. It was like the outperform, and then all of a sudden it like fell. And so I really think earnings, macro data, jobs report on Friday, CPI report coming. It's a busy August. Remember, there was no FOMC meeting in August. They have the Jackson Hole event, but then they skip to September. So Powell is a little cautious, a little bit, trying to give some kind of guidance what may happen in September. There's still a lot of people. It's still early, but there's still some indications that they may go 50. They may go 25. No one really knows yet. I think the Jackson Hole event's going to set the tone.
Yeah, and so you mentioned, August, this week is just going to be busy, despite the fact that we don't have the FOMC outside of the Jackson Hole event. But I do have our little graphic here pulled up of all the earnings we're going to see this week. So what are the kind of, you mentioned Uber and Lyft, the gig economy ones, but what are some other ones, Nick, that you're really going to be watching this week?
Caterpillar, BP, JetBlue, Fastly, Lyft, Twilio, DraftKings, Starbucks, PayPal. There's a lot going on. And I think some of the oil companies that reported, like Valero, they just smashed earnings top and bottom line. It was like they beat almost double for revenue what they wanted. It was just a lot of the oil companies I expect to beat. When it comes to airlines, not really sure, because JetBlue's reporting this week, and we have that the whole saga with Spirit, JetBlue, and Frontier. Who's going to win the deal? What's going to happen? We did get late Boeing news Friday night with sources with the Dreamliner. They could be coming back. So really, I think airlines are positive. There was a stat this morning out of Lisa Farbstein. She works for TSA. She's a public affairs spokesperson. The July analysis, she tweets this morning, at TSA officers screen an average of 2.267 million people per day nationwide in July, which was 88% of the pre-pandemic 2019 volume. So airlines, a lot of people are traveling once again. We still have the airline cancellations, that whole thing in Washington. How are we going to have people, whenever they cancel, are they going to get money back, or how can we sue the airlines? So I really think that travel, I know when I was traveling, because we drove from here in Pennsylvania over to New York, there were a lot of truckers. And just think, guys, if truckers stopped for 24 hours, this world would need, we passed so many truckers. I think in just an hour's time span, we passed almost 4,000 truckers Sunday morning at like 8 a.m.
This was in the New York area, or where?
So this was coming through Pennsylvania. We were on the turnpike through Harrisburg.
Okay.
We were everywhere. So it was about a 6.5-hour drive from where I am here in Pennsylvania to New York City, the financial district. But we were on a major highway for a while, and it was just alarming to see how many trucks were coming like through New York and coming by New York, even both ways. It was just alarming.
Wow. Well, all right, next. So let's see. Where do you want to start? Let's go over to the Twitter Elon Musk saga real quick. What have been the latest things you're reading in this whole deal?
So I really think a lot of people are expecting that the Chancery Court and the judge is really going to make him buy it. He may have to sell some more Tesla shares. That I don't really know. I'm not trying to speculate, but I really think here this judge they picked the high best judge here for the Delaware court. I think that he is going to be forced to buy it because reading the agreement, the reason why he wants to buy Twitter is he was getting sick of the bots. And all of a sudden he says that the Twitter bot data isn't really there seems to be too many more bots that they're expecting. Well, in the first place, he wanted to buy it because he says there was too many bots, and he was going to try and verify all real people. He was going to try and fix Twitter. Now, all of a sudden, he's backing away. But the bots had nothing to do with the original deal that he signed, from what I'm reading, from what I'm hearing, that he wanted to buy it for $54.20 a share. It's nowhere near $54.20, so it's going to be a battle. I mean, earlier this morning, Benzinga broke the news before Bloomberg, if I'm not mistaken, regarding some Twitter news about a couple, I think it was Green Shield taking a stake in Twitter, going long on Twitter. I saw that on Pro this morning. And so I think a lot of people are gearing up for the October trial between the 17th and the 21st. I know I'll be watching it along with many others.
Yeah, and I mean, that's with right now, I think we're kind of dependent on just waiting for the court case to develop, getting updates from the Delaware court system on what are the latest decisions made there. But in the meantime, all we really have to look for in terms of news updates on the Twitter Musk deal are just inferences we can make through different things. And something that we saw on Twitter, I believe this was over the weekend, but Elon Musk was tweeting, as Elon Musk does. And he was basically saying there's no good news outlets anymore. Like, I want a old school, The Economist / the Daily Report with Jon Stewart, or I forget if that's the exact name of the show. But anyway, but then he followed that up with saying maybe Twitter can become this. So a lot of people were, kind of trying to read between the lines here and saying maybe this is Elon coming to grips with the fact that he might really be forced to own Twitter. So if you're going to be forced to own it, you might as well lean into it. So he's saying, hey, maybe Twitter can be this kind of new media type thing that he sees as missing in our current climate. Yeah, it was Jon Stewart. He was talking about the daily. Is that what was that show called though? Daily Report.
Yeah, no, I followed Elon and see what he was tweeting, and I mean, I think he's realizing now. I mean, he should have realized from the beginning, but I think he is realizing now, oh, wait, I kind of signed an agreement. I think I'm going to be held to it. And so, I mean, it's been a whole trip between Twitter and Tesla. We've seen a lot of news whenever Twitter comes out with some news, Tesla tends to move lower, but then Tesla got that spike because he's saying he doesn't want to own Twitter. And so it's a very complicated story. And no, I think now that he's really coming to grips saying, I think I'm going to have to own this. So let me just be prepared. Because look, that judge, whenever he testified, whenever they had that court hearing, the judge was interrupting him a few times saying, hold on, Musk, hold on. Let's just get right to the facts here. So I think that trial really set the stage saying what we're going to be looking into, because he wanted a February trial and they wanted a September. So I really think that they came to grips here to say what may happen. And I'm thinking that he's going to be forced to buy Twitter. I may be wrong, but that's just what I'm thinking.
Yeah, and the only reason why I could imagine that sorry, I've got Chevron pulled up as we're talking about Twitter. I just realized the only reason, or the only explanation I could see why really the stock. I mean, obviously you have the possibility that Elon Musk is able to win or has to pay $1 billion and gets out of it as a reason why the stock's not trading closer to that $54 buyout. But I think another reason is they may reach some sort of settlement where Elon buys Twitter and he's still paying maybe too much than what it's worth right now, but maybe not that initial figure realized. And I think the Twitter people that are itching to sell would probably accept that deal, say, okay, we're still going to make some good money. We're going to sell over value, and we're going to, not have to worry about going through this whole court case trying to enforce the $54.20, buyout. Maybe say it's $43 instead of $54. Even at $43, that's still way higher than Twitter would be right now after, Snapchat's earnings and how Meta's performed and everything. So I think there are a number of possibilities, but I do think this isn't something that Elon's going to be able to just kind of get out of with no repercussions.
No, I think that you're not the only one echoing that. I've read a lot of analyst notes, one from Wedbush, Dan Ives. He laid out a scenario the one day, and next thing you know, it was like a 30% chance he's going to walk away. The next day, the news came out saying he was walking away. So really, any slim chances from going saying yes, we're going to buy it, to no, we're going to buy it. I mean, any slim chance of anything is like maybe going to be the top performer, the top yes or no. But I think to that point here, he's buying Twitter in an in an in an area right now that we have a lot of layoffs going on. So many companies are saying we're laying off this kind of sector. Rivian cutting 6% of its workforce, Google, Microsoft, and they're dropping at key times in the day, 12, 1 o'clock in the afternoon. All of a sudden, we're getting this hint, the information coming out with Google, Microsoft coming out with a cut. And next thing you know, we're seeing the markets falling on that news, and then we try and rally through the end of the day. But I really think that the key themes here over the past few weeks I've been seeing is 3 p.m., 3 to 4 is really either power hour or sour hour. We're either gaining into the close or we're losing some steam into the close. And I noticed that when I was at the New York Stock Exchange watching the boards and watching stocks trade in that hour. I really think news dropping right in the middle of the day, 12, 1 o'clock, that we're cutting workforce, so many different areas. I mean, I had a list going at one point, and then after a while I said, forget it. I lost track because of how many companies were cutting. And so I don't know if we've heard from Twitter. I don't remember if we've heard from Twitter if they were going to have layoffs or not, but I'm eager to hear this week. Uber, Airbnb, Lyft hearing, because I was in a New York City cab. And so, I'm eager to hear for the gig economy what they're expecting, like the Ubers and the Lyfts, the Airbnbs. And so I'm eager to hear what they're seeing on their end. Are people still going to Airbnbs? Are still people doing DoorDash? Are they still doing Ubers? Are they still doing Lyfts because of the pandemic? So I really think those are really key stocks to watch after hours, because I really think that's going to set the tone for the next day.
Yeah, and I mean, that's what makes what we're doing, Nick, kind of following the news that drives the stock market so interesting, because you never know what you're going to get on a day-to-day basis. I do believe, off the top of my head, Twitter announced something in terms of if not layoffs, like a hiring freeze or something. But my whole case, and the case that I've made, is in looking at a lot and a lot of the same people that seem to be calling for like a big, stock market crash here are the same ones that are pointing to every time a different company is announcing any sort of layoffs or hiring freeze. But from what I've seen, or from what I've gathered so far, is that a lot of the companies, like I mentioned at the top of the show, that got these boosts from COVID, if you're talking, technology companies. I mean, take a company like Apple, for example, right? Apple was selling more MacBooks during COVID than ever before because more people were working from home, whatever. That's going to cause you to hire more people. And then as those demands kind of level out, maybe you don't need as many people. And it's not really that worrisome to me to see some of these companies that grew a lot during COVID. The social media companies are definitely some of them, the different bigger technology companies, Google, Apple, Microsoft, you name it. And then, certainly some of them, like the fact that Rivian's laying people off, not a great sign for sure. But I'm going to be more concerned, Nick, if I start seeing, Walmart and FedEx and UPS and companies like that, if they start announcing layoffs, then I'll be more, I think my ears will perk up more about like these different layoffs happening.
No, that's true. And I think Carl Quintanilla from CNBC, he shared something a few weeks ago, and it's been a few weeks, and it was just, I think it was B of A, Bank of America. They were tracking the companies with layoffs. I mean, I was just going through, and it was like so many. And then we have the individual companies saying the CEO's going, he's done. We're going to have a new CFO. And so there's like a lot of restructuring here we have in the companies. Some companies like Snapchat bringing on, I think it was Snapchat. I don't remember the Secret Service they brought on. He was going to report to Evan Spiegel. He's going to be like the security officer or something. So there's a lot of restructuring, rebranding, I think, to some companies. But no, I think if we hear the Walmarts, the FedExes, those type of companies saying we're laying off workers, then we should really start to being worried. We should really start worrying. And then we have the debate here on Wall Street, and the debate, are we in a recession? And so that's another key question. I don't think we're in a recession, but, that could be depending on which definition you hear. We're still waiting from the NBER, the company, or the economics research company that actually determines if we're in a recession. That could take, I read, 6 to 12 months before they tell us. And so that means the recession probably has passed. So really, we're left to deal with a lot of speculation here. What's going to happen with the economy? Are we in a recession? Consumer spending? The different sectors that overlay, are we in a recession? We're really going to have to speculate for ourselves and hear what other White House officials are saying and other people are saying on TV about different industries, if we're really going into a recession or not.
Yeah, and that's what I mean. We talked about this on the show last week because it's obviously been the hot button debate, because I think a lot of people have that, okay, two negative consecutive GDP quarters with negative GDP is a recession, but it's not very. And if you want to run with that, fine, sure. And a lot of people that are have their political reasons for doing so, but if to me it's like, I'm not. If that was it, if we had 2 quarters in a row of negative GDP, and say the next quarter is positive, and you're still going to say, okay, that was a recession, we're not going to look back on this in 10 years and say, oh, remember the big recession of 2022. I mean, just you had like job growth coinciding with the negative GDP, which means, okay, maybe there's some loss in productivity somewhere. Like these different things. It doesn't necessarily mean, okay, there's an overall downturn in the economy that you really associate with a true recession. So call it what you want. I don't think what we've seen so far is what most people would associate with a normal recession in terms of unemployment rising, layoffs and everything. 'Cause, right, Nick, we're talking about the layoffs at some of these big tech companies, but if you look at the overall unemployment and job numbers, they've continued to be strong. So again, call it what you want, but we can sit here and argue about the semantics, about does this mean recession? Okay, if who said that the 2 negative, like, I don't know where that became the common thing. It's kind of the same thing with bear market being exactly 20%. Like, some people argued that we weren't even in a bear market even as we reached 20%, that's not really a great definition, but it's like the easiest. So again, I think it's interesting hearing these different arguments. I think it's been kind of funny in a way, seeing on Twitter people arguing so much, because it doesn't really matter. Like, call it what you want. The economic conditions are the same. We're looking at all the same numbers. You're just, arguing about what you want to call it.
No, and I think too, if we were in a true recession, we still wouldn't have positive earnings, just because we have some companies that are missing expectations, like the big companies, like the technology companies, Amazon and Apple especially. I mean, I think it was Microsoft. I was on the floor of the New York Stock Exchange and we were going through the numbers. I think Microsoft missed on almost everything: EPS, revenue, the gaming sector. And so not many, I guess it's summer, so maybe not everybody is like inside playing video games, but I really think so that I think earnings, if we were in a true recession, we still wouldn't be up for quarter over quarter or year over year, one of the two. I don't really think, if we were in a true recession, earnings, I think, could fall 20, 30, 40%, depending on which type of recession you're in. And we're not seeing that. Maybe we're going to get a better look at this week when we hear from the gig economy sectors to see where the economy is, and maybe, eager to hear the CEO comments of Uber. Again, it's like all these companies it's just all this stuff is coming back to the gig economy sectors, because we're eager to hear what the CEOs are saying or what they're seeing too with their company. After hours, earnings, whenever, I think it was Elon Musk, he says, if I'm on the conference call, this was past Tesla's quarter, he says, if I'm on the conference call, that means some crazy stuff is going to happen. And I think conference calls aren't supposed to be that. He says, if I'm not on the conference call, everything is good. Well, conference calls aren't supposed to be whenever CEO or different things are retiring. That's supposed to be made in like a release, not for the conference call. A conference call, to me, is supposed to reiterate, give guidance, really talk good about your business. You could talk bad, but really the conference call for analysts and investors, they want to hear what you're thinking, not about, because someone asked him about like supply and demand, he laughed at the question. But look, we have GM CEO Mary Barra. She thinks that she's going to overtake Tesla when it comes to EVs. I think that's going to be some ways to go because of how many Tesla EVs are there. I think Tesla's dominating the EV market. Stats I looked at last week, but I really think so that the gig economy sectors and CEOs and conference calls are really important in this time. And I think if you're not giving guidance, I really think that's really making your stock go lower. I think if you beat on the quarter, but you don't give the guidance, there's a signal saying you don't know what's going to happen. I mean, Apple hasn't given guidance since the pandemic. And I mean, their stock performed well because they talked, I wouldn't say good, but they gave some upbeat guidance. And Tesla or Apple CEO Tim Cook was fearful that they were really going to have to eat into the supply chain issues. I think he said 10 billion, and they only ate 4 billion. So that's some good metrics. But even though he didn't give the guidance, the stock still rose. But I really think guidance is key in today's world.
Yeah, and that's why, I mean, everyone always talks about in the market and with stocks especially is it's like, it's not what have you done? It's what have you done for me recently, and what are you going to do in the future? It's not really about history. People care more about forward looking a lot of times than what we can see looking at different stats that show us how performance was in the past. But yeah, I mean, that was something too that, to your point, a lot of people that were more on the bearish side going into this earnings season were saying, okay, we've seen the multiples get crushed. We've seen the valuations of companies get crushed. Now it's time to see the earnings crush. You're going to see this trickle down into the earnings. All these companies are going to miss and guide down, and you're going to see another downturn. And that didn't really happen. And to your point, if we were in a true recession, you would expect to see that. You would expect to see companies across the board, not maybe every single one, because there are obviously companies that do well in recessionary times, but the majority of companies, say in the S&P 500, in a true recession, to me, would be guiding down and missing and having poor quarters, which isn't really all what we've seen. We've seen, the bar had been set lower this year or this quarter for expectations for earnings. If you look back at something like we can just look at Apple's right here. Right. If we go back to 2 quarters ago or 3 quarters ago, they were bringing in revenue of 123. This one was 82. So it's down a little bit, but I mean, it's still a company that made $82 billion in 1 quarter. That's huge. That's massive.
And they beat on the top and bottom line. I mean, everybody was coming into last week fearful that because we got that early signs of Google and Microsoft not doing so well. And then they were towards the end of the week. Everybody was very concerned on Amazon and Apple saying, what happens if they don't beat? What's going to happen with guidance? Is the market going to tank? Let alone it was the opposite. Amazon and Apple did beat. And so then the market rallied. And so I really think that two stocks can be the overall driver, but I also think you have to look into the sectors. I mean, oil companies are beating. That's no surprise. Even though oil prices are coming down, oil companies are still making a lot. We saw that with Valero Energy. They blew expectations out the door. I mean, good Lord, how much they did on revenue compared to what analysts were expecting. Same with EPS. But I really think so that technology, they performed fairly well. And so I was watching CNBC this morning, and Jim Cramer, he dropped Meta. He dropped Mang. He said Ang. He just dropped it. So I don't know really because Meta and the metaverse and everything going on, but I really think technology, big technology driver for the NASDAQ. I really think we're going to have to watch those sectors as we come into Christmas, because who knows, Aaron, what's going to happen with some of these layoffs. Is that going to have an impact on the different services like Apple for gifts? I think there's 300 and some million iPhones not upgraded. Are people going to be going out still going to buy the gifts? Same with the shippers, with the truckers and stuff. Like, are we going to have enough truckers to ship the computers, the Macs, the iPhones, the tablets, the foods, grains? There's a lot of questions roaming that we're going to have to wait until we see, not only from the company, but as we get closer to the Christmas and seeing what's going to happen. Turkeys for Thanksgiving, we're going to have to be watching that. Are turkey prices going to be up? Is turkey ham going to be up? There's still a lot of looming questions out there that I don't have a definite answer, and many people don't, because we just have to see how it plays out.
Right, and unfortunately, none of us have a crystal ball. I see Fried Chicken Man in the chat asking, were expectations lowered, though, for most of these companies? I don't know off the top of my head. I think across the board, at least for the biggest like FANG stocks, the expectations for earnings for this quarter were a little bit lower than previous quarters. But then you have certain companies like, say, your Exxon Mobil's that people I think all expected to have good quarters because gas prices have been. So I mean, yeah, look like for. This is for ExxonMobil. The estimated revenue, the street estimates were 132, which is way higher than the previous quarter of 90 and 90 before that and 76 before that. But if you pull up something like Google, the estimated revenue was 70. The estimated revenue a couple quarters ago, so pretty flat for Google in terms of estimated revenue. Apple's was certainly a little bit lower. Microsoft's was pretty in line. Microsoft's was actually pretty in line, 52. So for most of the companies, it looks like that the actual estimated revenue wasn't much lower. Amazon had one kind of outlier quarter a couple quarters ago where the estimated revenue was 137, back down to 120 here, but still, I mean, that's pretty in line in trend. So yeah, I mean, fried chicken, man, that's a great point. The fact that most of these companies didn't even have, I think you have to think what are the expectations in terms of just what the overall market and retail investors and not just retail but institutional investors are feeling, and then the actual the street estimate. So definitely interesting here. I mean, Chevron too, check out here. Chevron estimated revenue of 57 billion came in at 68. So Chevron just absolutely crushed it this quarter.
No, I think it was expected that the oil companies were going to be beating because top and bottom line, and of course with the guidance and share buybacks because of oil prices within the past few weeks. But I really think as we headed into June and July, a lot of people on the street were saying, when are estimates going to be coming down? And then all of a sudden, right before earnings season, we had just a rush of so many downgrades coming in. And I was on Thursday and Friday, I was busy in the morning. Mostly my morning on Friday was trying to see all the upgrades and downgrades because of all the Amazon and Apple news and the Comcast news. I really think on the interesting point with Comcast, I think it was they were supposed to add, I don't remember the exact number, they were supposed to add some new customers for high stream internet. It was 0. They didn't add anybody.
Wow. Holy cow. I see Chris West in the chat saying everything is dependent on Pelosi's visit to Taiwan. Wait and see market right now. Definitely. I mean, I think you have, I was talking about this last week when people were asking about different China stocks. It's like, look, you can try to avoid, risk by not getting into some of these Chinese names. And I'm not saying that's, a dumb thought to have. But at the end of the day, even if all you did was own the S&P 500, and there's some big fallout with U.S. and China relations, like this thing's going down too. Like BABA's going to go down more than S&P 500, don't get me wrong, but we're all in trouble if this Taiwan thing creates some big controversy between U.S. and China, because at the end of the day, whatever you think about China is still our biggest trade partner in the world.
Yes, and I also think we're waiting too for OPEC this week. OPEC and their meeting with oil. We're really going to see. I think that's why oil was tanking. Well, not only that, but we've had a lot of weak factory data within the last 24 hours, and that's sparking demand concerns once again. And so oil is tanking again. And are we really going to see that the oil price is coming down? I mean, oil prices have been falling for, I think, almost 40 plus straight days per Gas Buddy guy, Patrick DeHaan on Twitter. He's a great guy to follow. If you guys don't follow him, he literally breaks down the individual areas of where gas prices are falling, the next states that are going to be seeing prices under $4 a barrel.
He's the Gas Buddy guy, right?
Yeah, Gas Buddy guy, Patrick DeHaan. But I also think Wednesday, when we get the OPEC Plus decision, are they going to hike? Are we going to see oil barrels unchanged? What about the SPR release, the petroleum reserve? I think there's a lot of looming questions we're waiting. I think Wednesday is going to be the key day first, and then Friday, the jobs report. I think estimate was near for 250,000 jobs added in July, but we've seen the unemployment claims slowly ticking up. I mean, they're still sitting at 40, 50-year lows. Pre-pandemic lows, but I see that we're ticking up periodically. And as we were talking, Aaron, I was just going through some news stuff here, and Moody's out. Moody says U.S. and Euro area data confirms slowing economic momentum, and they say that they expect U.S. real GDP growth of 2.1% this year and 1.3 in 2023. And then they were talking about the FOMC. They say that expects U.S. Federal Open Market Committee to take Fed funds rate to 3.5 to 3.5 to 3.75 by year end, and above 4% by March of 2023. So I really think that the Fed got to get inflation under control. I not only said that, but Neil Kashkari, I think he's the Minneapolis Fed president, he was on CBS's Face the Nation over the weekend saying that we got to get inflation under control. That's been the main message. And I think Powell raising by 75. Who knows? They may go by 75 again. It all depends on the eco data that we get from now, maybe through Jackson Hole, and maybe through the September FOMC meeting.
Yeah, I mean, I agree with all that. I see a Constitution of Axioms in the chat. Very bearish here, saying he's buying puts. Sure, I mean, a lot of people out there have been bearish the past few months. Definitely, felt that way when markets were at our kind of 52-week lows down in mid-June. But since then, in the past month or so, month and a half, we've really rebounded quite nicely, and a lot of those bears have gotten quieter. But yeah, Nick, I was seeing a lot of those, like you said, kind of bearish factory reports and whatnot, potentially giving some signs that we could see another correction coming.
Anything is possible. I mean, we're really going to have to be watching the eco data. I mean, some argue that the jobs report is a lagging indicator, because it's a month basis. But again, ADP, we don't get their employment report again, I don't believe, because they're still trying because of the misses and some of the fake releases. So we don't hear from the ADP again. So I really think that this week going into next week and through this month, we're really going to have to watch key things. The Pelosi to Taiwan, that's a major headline that we're watching. We're going to have to watch OPEC this week. We're going to have to watch earnings this week. And we're really going to have to watch into Thanksgiving, into Christmas, into Q3. There was an early estimate out of Atlanta's Fed GDP. I believe it was Atlanta's Fed late last week, that they expect Q3 GDP up 2.1%. And they says that could probably change tons of times. And I expect that it would be. So we're really going to have to watch GDP over the next few weeks. We're really going to have to see where Q3 and Q4 takes us, the second half. I really think the second half, I think the first half set the stage for, I don't want to say a real doom and gloom, but I really think it set the stage for a cautious second half. We're going to really see if the S&P could get back up to 44, 47, 4,800. And over a chart, I reference this a lot at my own house because a lot of people my family members ask me for some advice, taking some charts. I said, we have S&P targets ranging on the street from, anywhere from 4,900 to 3,600 above and below those levels, because really nobody knows. And so coming into this week, I think today, tomorrow, and I think this week is really going to set the stage of what may happen. And I feel that we're going to be getting, I don't want to say a rush, but I think slowly but surely we're going to be getting notes from the banks, JP Morgan, Goldman, Bank of America, Citi. I really think we're going to be getting banks coming in with different, reiterating their S&P target. Are they going to lower it? Are they going to up it? I really think soon, relatively short time, maybe this week, maybe next week, but I really think soon we're really going to be seeing a rush of those banknotes coming in, really reiterating their S&P target. They may reiterate it. They may take it below. They may take it above. I really think last week, coming into today with Friday rallying, we closed. Nobody really mentioned this, but we did close on the S&P 500 above the 100-day moving average for the first time, I believe, since early April.
Wow. Yeah, and I mean, right now, like you said, the banks are kind of all over the place. You have, I believe, I think Bank of America might be the most bearish on the street right now, just in terms of their overall S&P price targets for end of year, but they're really all over the place. I mean, some of them have them set, like you said, lower than where we're at right now. Some of them have them making new all-time highs. So certainly, all these things up in the air right now, whether you're talking about Fed Fed strategy, whether you're talking about what's going on with Nancy Pelosi in Taiwan, whether you're talking about earnings, we have all these different things up in the air that I do agree with you again there, Nick, that I think sometime here in the next few weeks, here in the next 3 weeks or so, we will get some more of these price targets set by the big banks. And I think a lot of people, you can decide, I guess, how much credence you want to give that, how much importance those bank targets have. But you got to remember at the end of the day, I mean, JP Morgan is employing thousands of people and paying them a bunch of money to look at these numbers and to analyze these things. So I'm not saying, oh, if JP Morgan puts out a target, that's the Bible. No, of course not. But like Nick's saying, like these things are things that other people on the street look to and listen to.
No, as of last check, CNBC has a market strategist survey, and I believe it is updated every time we get a new price target. And I'm looking at it right now. According to this, what I have is the maximum target right now for the S&P is from JP Morgan, 4,900, and the minimum target is 3,600 from Bank of America. The average target is 4,372. And the median target is 4,300. So if we closed right now on the S&P, we would be around 200 points below, because right now I believe we are sitting right above the 100-day moving average. And something I've noticed too in the charts is the 50, 100, and the 200-day moving averages. They've been falling because of the market pricing in June and July with the lows, but I've noticed that they've been flattening out. So we haven't really seen a big upwards and a new 200-day moving average, a new 50-day, 100-day. They've been trailing like the S&P, and so you can see on the chart is on from Friday on from today. It was like we had this. It's just like this steep line, and you could even draw like a line that really shows like a trading range. And I referenced that on Friday in my own notes, because I do have a Google Doc running. And so I'm like trying to keep track of everything. A trading range is like, are we going to break it? Are we going to resistance? I really think we're going to have to watch. S&P right now is flat. It's at 4129.67. But I mean, we're near 4130. Are we going to get back to 43? Are we even going to reclaim 4,800 by the end of the year? I really think it all depends on earnings, eco data, the Fed. We have a long way to go.
A long way to go. All right, Nick. So we've talked about a lot of things. Are there any other topics that are kind of top of mind, things that you've been following recently that we have not yet talking to? I see Henry Sanchez in the chat asking, how old is this kid, talking like a straight up pro. He is a straight up pro, and he's only, what are you, Nick, 16, 17?
16, yes, 16.
16 years old.
So
wow.
I really think, oh, sorry, go ahead.
No, go ahead.
No, I really think,
wow, that it's impressive. You're only 16 doing this.
So I really think, because we hear from the autos and the airlines, I really think second half, how I'm trying to, I don't know, newsworthy. I'm really focusing on, are we going to get, is airline travel going to get back? Are the Boeing planes going to get back? Supplying, I really think we're going to be watching, for me, I'm really watching all news, because any news is all news at this point. But I really think that news headlines that really determine the economy. So really, are we going to get more layoffs? Is that expected? Yes. How are the General Motors? How's the supply chain holding up? Boeing planes, are we going to get those back soon? There was a report from Reuters late Friday night that the Dreamliner is almost cleared by the FAA. Are we going to get Dreamliner planes going to be delivered once again to American, JetBlue, and all the other airlines? So I really think that we're going to have to watch the banks, because I think the banks are a very important part of the economy. So I really think going into the second half of the playbook, second half year, you should really focus on oil, supply chains, General Motors, a lot of the autos, because autos and airlines, I think autos especially, because those are really going to have an impact on supply chains. The gaming sector with the chip companies, Intel, NVIDIA, AMD, with the bill passed by the White House, or with the Congress going to the White House for the semiconductors. So we're really got to position, because it may all fall apart at one time. So we're really going to have to watch. I'm watching the Pelosi visit coming this week, really what's going to happen with that. But I really think second half, Aaron, we're really going to have to be very careful and be very on alert on companies that may slow hiring. How's that going to have an impact heading into Christmas? Are we going to be able to get the gifts on time with Amazon? I really think we're going to have to watch supply chains, oils, the supply chains. I really think, because even though you just say supply chains, you could even watch the autos, because those are going to have an impact. Whenever General Motors the one day said they have like 95,000 vehicles they can't deliver because they're missing this one part for a car, and one part can doom 95,000 vehicles that are just sitting in a lot taking up space.
Yeah, I mean, to me, speaking, so we'll break that down into, we'll talk about oil and auto makers. So with oil, we'll pull up just the USO fund right here. I feel I've been saying this, and I feel like it's a little bit too maybe cut and dry. It's probably not as black and white in this, but this is how I feel about oil right now. You have this big run up, obviously, with, in part as demand is just increasing as COVID kind of levels out, people are traveling more. And then, of course, you have the Russia-Ukraine, which is limiting supply, thus bringing increasing the price even further. But up here, right, where we're at these elevated oil prices, if you really think oil is going to like crash and come back down here, the only way that's going to happen in my eyes is through a kind of major recession that does crush demand. So to me, what's interesting with oil here, and I don't know about the actual commodity price, like the actual crude oil, but for the stocks we can talk about in terms of at least like the gas plays, your Exxon Mobils, your Chevrons, if there is no recession and gas supply, remains tightened and prices remain elevated, like some of those companies could be getting higher profits for quarter after quarter for who knows how long. But then again, the real downside here is if we do see some sort of or those recession fears pick up again, and then we will, we would see a drop in oil prices.
No, I mean, we're going to have to watch, because I think right now, Wednesday, it's in OPEC's hands to what's going to happen with oil prices. I mean, look, they're falling today. I think oil WTI is around 93, 94. And so, hey, it may go below the Russia-Ukraine invasion. They may fall below those levels. But I really think Wednesday is OPEC going to say we're going to be regular? Are we going to maintain our goal? Are we going to rise? So I really think Wednesday is going to be the key day for oil to see how, because who knows what's going to happen with oil. OPEC may hike. OPEC may say we're going to stay unchanged. We're really going to have to see, because OPEC Plus and OPEC, they've really been giving some signs that they may not be hiking. They may not be slowing. But I really think Wednesday, OPEC, it's going to be, okay, OPEC, deliver. What do you got for us? And really, we're going to have to see how the market reacts. I mean, it may react positively to some, but I really think that the data we got today really didn't show a good sign with manufacturing, PMI, and so many data today. It was weak. We have 2-year lows again floating on the street back to July 2020. So I don't know if that's some kind of sign that not many people are scooping, that not many people are really watching, but we're going to have to pay attention to the economic data, the manufacturing PMI, services PMI, really how far back we go, maybe 2-year low, 3-year. We're really going to have to watch that.
Yeah, and just a quick note, I do see on live on CNN right now, they are talking about Nancy Pelosi visiting Taiwan. I guess it is about just after midnight in Taiwan right now, but they have their Taiwan correspondent up and talking on CNN. So Pelosi to visit Taiwan despite China threats, as the headline reads on CNN right now. And like we've been talking about all these news stories, Nick, I mean, we're kind of at the mercy right now of just waiting and figuring out what's going to happen with OPEC, what's going to happen with the Fed, what's going to happen with Pelosi in Taiwan, what's going to happen with Elon Musk and Twitter. Like all these things we don't know, but we're going to continue to follow them. We're going to continue to report on them and bring you guys the news as we get it in real time.
Yes, and I think, hey, guys, if you don't follow me on Twitter, go right ahead, because I am up very early. I'm up between 4:30 and 5. Doesn't always mean I'm going to be tweeting, Aaron, but because I read through a lot of notes in the morning through upgrades, downgrades, what's going to be happening on the street. I try and post the news as it hits the wires. But sometimes it's not always the case, but I encourage you to follow me, because I do post good content. I do post news like Benzinga today had this. They have a lot of scoops, and today was about the Twitter and the green shed with and how much they paid for Twitter, how much a share. So I really think you guys, if you don't have Benzinga Pro, you should. I do. So if I have something, you probably should, because it is a very valuable tool. You can do live charts. You can go through the scanners, the watches, what's happening with the news, and you can customize your news feed on Benzinga Pro on what you may like. But I recommend you getting a Benzinga Pro. I recommend that you follow me just because of all the news stuff I post. Just because I'm heading back to school soon later this month doesn't mean anything. I'm still going to have the ways to post on Twitter, maybe through a bot or anything. But no, just know that news headlines are very important, and you have to dig deeper. You just can't read the headline and sell or buy a stock. You really have to go into the internals, look underneath the surface on what the article is trying to tell you. I do that a lot. Just because I post the headline, I try and go back and post the story later once it's available, just because there's sometimes a 10 to 15 minute delay regarding the stories and the headlines. But I really try, and you should really try and look underneath the surface. Just because the headline's saying sell this stock, or this stock is getting hammered because of this, you have to look. And that's with key stocks. You shouldn't just buy or sell the stock because it reported earnings. You should listen to the conference call. You should listen to the CEO, the CFO, and really hear what they're saying.
Yeah, I mean, and Nick, I appreciate you saying that about Benzinga Pro. We do have that free trial pro.benzinga.com. No credit card or anything needed. I also dropped that link to your Twitter in the chat because folks should give you a follow on Twitter 100%. I'll drop my Twitter in there as well, just in case anyone wants to give me a follow. Probably not as useful. But I see Fried Chicken Man asking some more about your background, Nick. So you mentioned you're going back to school in the fall. But Fried Chicken Man said, how did this kid learn all of this? Very impressive. Would love to know more about his background.
So that's a good question. Ever since I was little, I always watched TV shows, Bloomberg, CNBC, ever since I was 8, 9, 10 years old. My grandfather, actually, I have to give a shout out to him. He was the one that really introduced me, because he's a person that watches CNBC almost every morning. He's up at 4:30, 5 o'clock. He's an early bird. He's retired now, but no, he watches CNBC. He watches the market. And so whenever I would stay over at their house when I was little, I would always get up early, go watch CNBC, learn about stocks, learn about the major averages. And then after a while, I always wanted to be a news anchor. And so now I'm really trying to focus on Twitter. As I just crossed 5,000 followers this morning. Never thought I would get to that mark, but I'm really starting to really want to dive into being a news anchor. That was the reason why I went to the New York Stock Exchange. Thanks to Jay Woods, chief market strategist of Drive Wealth, who hosted me for 2 days. He really taught me a lot about the market, about the background of the New York Stock Exchange. But I really think visiting places, getting in contact with people that you may want to be future colleagues one day. I'm in contact with a lot of CNBC anchors, because that is where I want to go, because I've been watching CNBC all my life, Bloomberg. But I really think so that you should start early. I've always been committed to that, starting early. Some people say, no, you should wait a few years. Don't go too ahead of yourself. Me, I do want to start early, because there's always an opportunity, and sometimes opportunities leave. And so I want to make sure I have a chance to, at least I have an opportunity. And so really, I started Twitter back in 2018, and now I'm starting to post a lot of news, start to get a lot of following. And I really think there's a lot of people that just post the news headlines and that's it. Not me. I really engage with a lot of people, comment on posts, tweet different people, post a lot of notes, because there's people that there's one account that I know of that has like over 500,000 followers. They just post the headlines and the stories and really doesn't interact with the people. And that's what I do on Twitter. I mean, if you comment, if you send me a DM or anything, I will respond. It may take some time, but I'm always interacting and engaging with you guys, just because. Oh, and to mention, I was interviewed live on the floor of the New York Stock Exchange on Yahoo Finance on Monday of last week. That was a great experience. But no, I think my background is starting early. That's what I was always committed to do. And I don't try and let anybody get in the way. There's still a lot of negativity saying you shouldn't be doing this at your age. You shouldn't be pursuing this dream here. You shouldn't be doing this. You shouldn't be doing that. I just cut the nonsense. I block those people. and I lose communication because I know I wanted to always do this, and now I'm pursuing my dream because I'm starting early. And you should always do that. You should always try and block negativity. Negativity is nothing. You should always have the people that support you. And Benzinga is one. Benzinga has supported me. They've dropped me a follow. I'm on here on YouTube chatting, but I really think that the companies that really want you, like CNBC, different people that want me, that the followers, you really should engage in Twitter. You should really engage with the people. You shouldn't just post something and not engage. So just because people like 60 some thousand tweets, because that means they're engaging. They want to make sure that you feel comfortable with their Twitter feed and, making sure that you guys get the news. And for me, I really like to engage because that's who I am. I'm a person that likes to talk. As you can see, I'm rambling here. But no, I really think that talking is very important because if you want to be a news anchor, you have to talk. You have to ask the valuable questions. And that's what I'm trying to that's what I'm committing to do. Some days are harder than others just because I feel like sometimes you don't always get the attention, but you always should keep going because in the end, your hard work always pays off.
Yeah, and I love that, Nick, that you're able to kind of brush that negativity off because for whatever reason, I mean, you've grown your following on social media and you're kind of a poster child or for someone who has used social media for very good things and to explore your interests in stock, stock market news and whatnot, and really, growing an audience and getting better at what you do through social media. But oftentimes social media, for whatever reason, is also accompanied with these people that all they want to do is spread negativity and be kind of haters. And what you'll find, Nick, is as you get more and more successful, you'll get more and more of those people trying to drag you down. And so, as you continue to grow, just continue to try to block out that negativity. I know it's hard to do sometimes. But yeah, man, I mean, that's awesome. I'm glad that you're right now starting to get some of that recognition. And I think, because, people like the story. Oh, here's this young kid that talks really well, that knows his stuff, that's working really hard. But outside of the story, I think it's more a testament of your hard work and dedication and doing this day in and day out. And it's like anything else, whether you're, passionate about this or passionate about gardening, like you do it every day, you're going to get better at it. So I'm excited to have gotten connected with you, be part of this journey because, I know you've got some exciting things you're going to get to, whether that means you'll end up on CNBC or Yahoo Finance, or maybe here at Benzinga as a little stepping stone in between. But certainly seeing a lot of love flying in the chat. So just keep doing what you're doing, man.
No, thanks, guys. And I mean, really, it's not just because I'm doing it. It's because of the people. They want to know about me. They want to follow me. And so I really appreciate you guys for the people that do that. And for like the individual news companies like Benzinga, you guys reached out. Hey, would you like to come on the show? Sure. Yahoo Finance. Would you like to come on for an interview? And different things. I mean, it's just the small part about reaching out and getting connected, because getting connected go a long way. Ever since I joined Twitter, I never thought I would go to the New York Stock Exchange until I met Jay Woods, Chief Market Strategist of Drive Wealth. And I asked, hey, I would love to come to the stock exchange. Would you be willing to host me? And he said, sure, I would love to host you and your family. And so I really think getting connected with somebody on social media can go a long way, because that's always part. You just can't go into the business not knowing anybody. You have to know your ins and outs. You have to know people that are willing to help you, that are willing to assist you in any way. If you need anything, really, I think in this day and age, you have to really, I don't want to say you really just have to the pound people, like tweet them constantly or really get connected with somebody, but just dropping somebody a follow or chatting every once in a while and getting connected with them will really go a long way. That's with me. I followed Jay Woods for a few years now. And then one day I said, we've been good friends. We've chatted. I mean, we would send DMs constantly. He would see the news I post. I would retweet some of his content. And then one day I said, hey, Jay, I would love to be come to New York. I would love to be down at the New York Stock Exchange. Any way is that possible? And he said, sure, I would love to host you and your family. And then that happened in July. And so it's just one step closer, getting interviewed live on Yahoo Finance. That was just another amazing moment. So really, interviews and getting connected with people will go a long way and will pay off in the end.
100%. Well, man, like I said, keep doing what you're doing. I love having you on the show. We got to get you on more regularly. Maybe we'll set up a a recurring segment. Well, I guess it might be hard when you're starting up school here in a couple of weeks, but maybe we'll chat and hopefully we'll find a time, or maybe you can come on once a week, or maybe we do something for a couple minutes on a weekend or something. But yeah, man, everyone give follow a Nick right here, news_by_Nick on Twitter, and catch him here on Benzinga Live.
Yes, thank you. And while we're at it, there is one breaking story here. I'm just seeing off on my shoulder here on the other laptop I have. It's from the information. Here we go once again, guys. 1251, Oracle axes U.S. staff, part of plan to lay off thousands. There we go. 1251. Look, another company, another tech company saying we're laying off workers, and market reaction to this, not really doing anything. But again, more layoffs, as I said.
Yeah, and that goes in line with what I was saying. Like, to me, like a company like Oracle definitely did grow. I'm actually seeing Oracle bouncing higher on this. That doesn't make sense to me. But yeah, I mean, like, Oracle is definitely a company that grew during COVID, and then now they're laying some people off. Doesn't really concern me to the max, seeing some tech companies lay some people off. Seeing your Twilios, your Netflixes, your Teslas, your Oracles lay some people off. Okay, that's not the best sign in the world, but it's also not all right. Your Walmarts or your UPSs, your FedExes, laying people off.
No, and another thing that I think we have to look at is like the SPAC market, the IPOs, that the SPAC indexes. That's an area that was really hit hard this year because not many people are going public. There's tons of companies that are waiting to go public, and they're trying to find the right time. I think that the recent SPACs and the IPOs that went live, it was like the first day they did somewhat okay, and then the next day they were down 15, 20, 30%. They were being pounded because right now we're in a very cautious market where you have to make sure you have the money, you have the cash flow to keep going, to provide the services. You have to make sure you have to do a lot of things here. And so I really think that the Oracle news, no, I'm seeing that bounce higher. On my screen, I have it down 0.4%, but I see the gap up. So we're going to have to watch that. We're really going to have to watch a lot of companies too, different CEOs, CFOs retiring, because there's a lot of people that, there's a lot of companies that we're eyeing that I don't want to say that I'm particularly watching, but there's a lot of companies that they're due for a new CEO, CFO. And so we're going to have to watch that in the coming weeks and months and years to come.
Yeah. Do you have any hot take? I gave a hot take earlier in the year that I think by the end of the year, Elon Musk won't be the CEO of Tesla anymore. Do you have any hot takes like that?
So my hot take would be by the end of the year, I'm just going to throw this out here. I think hot take right now would be, my hot take would be is nobody knows what's going to happen. You mean Elon Musk, as you said, maybe will not be the Tesla CEO anymore. Who knows? By the end of the year, maybe Twitter is at $70 a share. Nobody really knows because we're in an economy right now that literally, as I say, nobody knows. That's because nobody knows. And that's the hot take is nobody really knows what's going to happen. Anything can happen. It was like back in 2020 and 2021, everybody was saying the same stuff. Oh yeah, it's 2020 or it's 2021. That's totally expected. You can also say that for 2022. Now we're setting the tone. Nobody really knows what's going to happen. And when you say nobody really knows what's going to happen, nobody really knows what's going to happen.
Yeah, I mean, I don't know how much of a hot take that is, just because that's kind of always the case, right? But I do appreciate your professionalism and not wanting to make any crass predictions and just wanting to stay more professional. But yeah, Nick, always a pleasure to get you on. Like I said, would love to try to figure out how we can set up something where we can get you on more regularly. I know that'll probably be difficult with school starting back up, but we're flexible, so I'm sure we can figure out somehow to make it work.
No, I think Fridays would be best because Friday my school gets out. We get out every Friday at 12:30, and I'm home by 1:00. So, anything can happen.
Hell yeah. All right, Nick, well, enjoy the rest of your Monday. I'll be in contact with you throughout the week. If you see anything, any big news stories or whatever, send them my way. And if I'm live on the show, I'll break it and I'll credit you.
Okay. Thanks, Aaron. Thanks very much. Thank you for having me once again. And guys, subscribe to Benzinga Pro if you haven't already.
And follow Nick on Twitter, news_by_Nick, news by Nick on Twitter. Nick, again, always a pleasure to get you on. We will talk soon.
Yep. Thanks, Aaron.
Peace. All right, guys, that was News by Nick on Twitter. Go ahead and give him a follow. Nick Brown, really impressive what the kid is doing. I love having conversations with him because he knows what he's talking about. He's following the news every day like I am. He did hang out with us longer today than expected, so appreciate that, Nick. We are at 12:55 right now, p.m. Eastern time, about 5 minutes till 1 p.m. That does mean we are getting toward the end of the show. Let's go ahead and just do a quick rundown on the overall market before we wrap up today. We will go over to the S&P 500 first. The S&P 500 is currently not down 3%. That's the USO. Currently down about 0.1%, 0.13%. So pretty flat day for the S&P 500 right now. Of course, like we talked about with Nick, we've got a lot of things up in the air right now. Whether you're talking about Nancy Pelosi, whether you're talking, OPEC. So not crazy to see the SPY pretty flat today, just as investors kind of digest all these different news items, different potential outcomes going on. You have the Qs. We're at 316 right now, up about 0.2%. So tech a little bit stronger than the S&P today. Your Dow Industrial Average very, very flat, down 0.03%. So barely down, but down. Let's check XLF. Down about 1%. So your financial, your banks and finance companies down a little bit today. We can check in on JP Morgan, down 1.3%. Wells Fargo, down 1%. Bank of America, down. So all your banks are down. Energy getting crushed today. Your XLE down almost 3 full percentage points. So the XLE definitely dragging the SPY today. Because if we go over to Qs, we're actually in the green. So it looks like big tech is doing decent today. We can check out Netflix up, Apple down slightly, Microsoft down slightly, Amazon up, Tesla. Let's pull up Tesla's chart real quick. Tesla up. So this is interesting. You've got this nice kind of beautiful rounding bottom right here. Anytime, and if you guys are OGs with the Benzinga channel, if Get Technical, on Get Technical, we were always hunting for these nice little rounded bottoms. When you have a stock that gets beaten down, all right, automatically, a stock goes down 20%. We talk about this all the time. You don't want to go in there and start trying to catch falling knives and start trying to buy it just because it's down 20%. Oftentimes, a trend is a trend, and a stock's down 20% for a reason. It'll continue to move lower. But if you see that stock move down 20% and then it's followed by this consolidation period, so you drop down 20% and then you trade sideways for a little bit, you start kind of soaking down there. You're soaking like you're a freshman over at BYU. And then you get this nice little bounce right here. And then once you get the bounce, then you can just find that previous spot that you kind of fell off from over here as your next price target. So now that we've come back up here on Tesla's chart, I don't know, because we've already kind of filled this gap. I would say if we break through this kind of 950 level, we definitely have room to run to 1,000. But I wouldn't be surprised to see Tesla kind of reject up here. We're running this resistance, then maybe come back up and retest again. But you got to love these chart patterns here. So all right, guys, it is about 1 p.m., so that will be a wrap for us today. Let me just give you guys a quick rundown on what we've got going on Money Mitch coming up. Money Mitch will be, so we've got stock market movers with Money Mitch. He'll be talking to Carlos Legaspi, the CEO of Insight Securities. So Mitch has been doing a great job of getting more and more kind of these experts on, people that work in the finance industry. Some of them, I hate to say it, but some of them may even know a little bit more than I do. So if you want to, I would stick around. This stream will automatically redirect you over to Stock Market Movers with Money Mitch. I know I'm going to be hanging out over there. So without further ado, let's go ahead and transition over to Mitch. We will be back tomorrow, 11:30 a.m. Eastern. Shout out everybody in the chat today. If you haven't already, please like the video. Please subscribe to the channel if you have not already. We'll be back tomorrow. Happy Monday, everyone. Peace and love. Follow me on Twitter, too. That's my last ask of the day. Follow me on Twitter at Aaron3 5. I will follow back. Free follow backs till the end of the day.